If you're wondering why is Euro-USD dropping today, the answer lies in the widening US-German yield spread and a dollar that refuses to roll over. Our Euro-USD technical analysis today pinpoints the critical 1.1562 level that must hold to avoid a freefall. Traders searching for Euro-USD support and resistance levels will find clear zones at 1.1604 and 1.1562, with resistance stacked at 1.1646 and 1.1672. For a deeper Euro forecast next week, monitor the ECB speakers and the US ISM print. This Euro-USD breakdown trade setup is designed for those who want to catch the next leg lower before the EUR USD just did something that should terrify late longs, and it's not what you think. Right now price is 1.1598, below every major daily moving average, and the 1.1604 support level just got violated. But here's the hidden trap. Almost nobody is watching the 1.1562 floor that, if it breaks, will trigger a liquidation cascade while trapping late shorts who are already piling in. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow. Session bias. Unequivocally strong sell across all intraday and swing timeframes. The single invalidation level that flips this entire structure is 1.1672. Write this number down. If we close a 4-hour candle above 1.1672, the bearish case is off. Right now, the herd is short, positioning is stretched, and that's exactly why a sudden squeeze to 1.1646 is on the table before the real selling resumes. That squeeze will be a trap for breakout buyers if you know where to fade. The market is heavily leaning one way, and when every headline screams bearish, the floor beneath your feet can disappear. The greatest danger is not the move down, it's the stop run that rips faces off before the trend continues. Let's pull up the weekly chart. The weekly trend is strong sell. Price is trading below the 100-week and 200-week moving averages. Momentum is rolling over. The monthly trend is still a buy, but that's a bigger picture lagging indicator. The immediate pressure is down. On the daily chart, price is below the MA20 at 1.1657. The MA50 at 1.1670, and critically below the 200-day moving average at 1.1682, which has been acting as a brick wall all year. The 4-hour and 1-hour trends are both strong sell. This is a rare alignment of bearish momentum that doesn't come around often. The MACD on the 4-hour is barely negative, but look closer. There's a hidden negative divergence where price is making lower lows while momentum is flatlining. That tells me sellers are getting exhausted, but not yet reversing. It's like a coiled spring. The next break will be violent. The RSI is at 33, not oversold, so there's room to fall before any meaningful bounce. The daily support at 1.1604 is the line in the sand. We are testing it right now. A daily close below 1.1604 opens the door to 1.1588 and then the critical 1.1562 zone, the last line of defense, before a plunge toward 1.1500. Resistance above is clearly stacked. 1.1646 is the first ceiling, then 1.1672 where the breakdown point becomes a reload zone for shorts, and 1.1688 is the absolute invalidation ceiling. Here's what most traders miss. The break below 1.16 on the 4-hour chart isn't just a support break, it's a market structure shift. The last higher low has been taken out, which means the trend has transitioned from a correction to a full-blown bear leg. Institutional algorithms are now reweighting their short positions, and the price action you're seeing is them building shorts ahead of the next catalyst. Gold is holding firm despite dollar strength. That's real money hedging against tail risk, not buying euros. The German-US 2-year yield spread has blown out to multi-year wides, and that spread is dragging euro to US dollar lower tick for tick. This is the dollar killer narrative in full force. Every time the spread widens, the euro gets slammed. The correlation is near perfect. If you see gold dropping while the dollar rises, that would be a risk-on shift. But right now gold's resilience confirms genuine fear, not a euro recovery. The last 24 hours have been dominated by a single sentiment shift. Analyst articles are screaming that the market structure shift strengthens the bearish technical case. When the narrative gets this one-sided, I pay extra attention to potential traps. Yesterday, we had ECB speakers attempting to sound hawkish, but the euro couldn't. Rally even 5 pips. That's a classic sign that the market has priced in any hawkishness and is now selling the fact. The real engine here is policy divergence. The Fed is holding rates higher for longer. US data remains resilient, while Eurozone PMIs are softening. The 10-year bund yield is dropping against the US 10-year, and that yield spread is the fundamental mirror of the technical breakdown. The dollar index is pressing against the 105 level, and a break above there would be the knockout punch for any euro bounce hopes. My 1 to 2 week directional lean is decidedly bearish, targeting 1.1500, unless we get a daily close above 1.1672. That's the invalidation. Do you think the dollar breaks 105 this week? Comment yes or no. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm going to give you 3 strategies, from conservative to high risk. Strategy 1, the sniper, is a patient play. We are waiting for a retest of the broken daily support turned resistance at 1.1646. Once price tags 1.1646 and we see a clear 1-hour bearish rejection candle, think a shooting star or a bearish engulfing, we enter short. Our stop goes at 1.1680. Just above the 1.1672 key level and the MA50. That stop gives the trade room to breathe but protects against a structural invalidation. Target 1 is 1.1588, the next support, and target 2 is 1.1562, with an extended look at 1.1530 if momentum accelerates. That's roughly a 1 to 2.4 risk-reward. The setup is void if a 4-hour candle closes above 1.1672, the sniper, conservative, entry, 1.1646, 1H bearish rejection, stop loss, 1.1680 take profit 1, 1.1588 take profit 2, 1.1562 risk, reward, 1:2.4 invalidation, void if 4H candle closes above 1.1672. Strategy 2. The active trader is for those who want to ride momentum without waiting for a deep pullback. Given the strong sell, we look for a breakdown below 1.1588 with conviction. On a 15-minute close below 1.1588, enter short. Stop loss at 1.1620, which is above the broken 1.1604 level that now acts as resistance. Target 1 is 1.1562. And target 2 is 1.1530. Once target 1 is hit, trail the stop to break even. Risk-reward here is about 1 to 2.1. Invalidation is a swift 1-hour closeback above 1.1604. If that happens, this trade is dead. Now, type your euro to US dollar range for tomorrow in the comments. Let's see who's aligned. The active trader, standard, entry, 1.1587. 15-minute close below, stop loss, 1.1620 take profit 1, 1.1562 take profit 2, 1.1530 risk, reward, 1:2.1 invalidation, void if 1H candle closes above 1.1604. Strategy 3. The aggressor is a high-risk momentum chase. If the market breaks below 1.1604 with strong volume and no immediate wick back, you can sell at market immediately. Your stop must be tight, at 1.1630, no questions. Target 1 is 1.1562. Target 2 1.1520. This trade can move fast, so you need to be decisive. Only take this if you can lose small and accept rapid price swings. If a 30-minute candle closes above 1.1630, get out immediately. The trap has sprung. This is not for the faint-hearted. It's for those who understand that the biggest gains come when everyone else is frozen. To the aggressor, high risk, entry. Market short on break below 1.1604 stop loss. 1.1630 take profit 1. 1.1562 take profit 2. 1.1520 risk, reward. 1:2.5 invalidation. Void if 30-minute candle closes above 1.1630. Never risk more than 1 to 2% per trade. No positions through high-impact news, especially with the ECB narrative whipsawing headlines. Stops are non-negotiable. This is how you survive to trade the next big move. The moment you let a loser run, you become the liquidity. The single most critical level for the next session is 1.1562. If that breaks, the euro is in freefall toward 1.15, and late shorts will be rewarded. If it holds, expect a violent squeeze back to 1.1646 before the next leg down. That's the trap you now know how to fade. Tomorrow, we are watching the US ISM services print and any late-day ECB speak for the next volatility shock. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.